I want to ask you about that very thing, because I noticed that you noticed the same thing that I noticed in terms of the 1 trillion. But I've got to ask you this question, right? Because, we could do such fancy things with that 1 trillion to extrapolate out, what Nvidia's potential is. But how much is their potential earnings at risk? Because it's not just, they obviously have got the moat that they've got now. They've got this leadership position. But AMD's on their heels. You've got Munster and Sam Altman and everyone else, and the hyperscalers all looking at chips in their own way and trying to develop out these AI chips. Can Nvidia do enough, quickly enough, before anyone else catches up to take advantage and get the lion's share of that money, if it is, the 1 trillion we're talking about?
Exactly. So we're talking about this $1 trillion. Nvidia's expectation is they're going to do $110 billion in calendar 25, just to put some perspective on this. And on the competitive side, I point out, yes, there's going to be more competition. I think that their market share within the GPU is going to probably go from 80% plus today to probably 60% in the next 5 years. So call that in calendar 28. So I do expect a decline. And I would just point out one piece related to competition is that this is harder than it looks, in part because they have a developer platform that sits around their chips. Basically, if you're an AI developer, this is well known, but it's a big deal. If you're an AI developer, you're learning on their CUDA platform, which essentially allows you to optimize models that run on NVIDIA chips. And that is a critical competitive moat that I think allows them to kind of maintain this 60% plus market share. We invest at Deepwater, we invest in both private companies and public. We're invested in one of the stars in the private chip space. It's called Rain Neuromorphics. And it's really tough. I can tell you as an insider looking at that, how hard it is for them to try to get any sort of edge relative to NVIDIA. It's difficult. And so I think, Will, it's the right question to ask is, yes, there's a massive market opportunity here, but is competition going to come? I think the simple answer is there's going to be less competition than we think over the next 5 years. The next 10 plus years is probably going to be a different story.
And I have a follow-up to that question that sort of ties into the same thematic. So if we, like you're suggesting, see that market share shrink to around about that 60% mark, what does that mean for the margins as well? Because we can talk about the guide for this year. Mid-70s, any business in the world will take mid-70s in terms of gross margin. It's perfection almost. But what are your expectations moving forward? Can they maintain the pricing that's led to them being able to capture those margins, or does that have to degrade along with the market share?
The next 3 to 5 years, I think they will maintain that. They did give commentary to expect margins to pull back a little bit in the middle and back half of this year, as they had some near-term benefits in the January and the April quarter on margins. But in general, I think that they can maintain that. And if I was going to just kind of put a stake in the ground relative to the conversation, whether it's related to market share or to their margins, is I think they're going to surprise people. And I think that investors need to ask it just a central question or two questions. Number one is, do you believe in AI is going to be as significant as Jensen is talking about? And then second is, how is that competitive piece? I believe it's going to be as significant, and competitively, I think they're going to keep up, in part because of that moat that we just discussed.